Good morning and welcome everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Let me ask you this. Have you gone out shopping lately? Well, if not, today is a good day because Dalal Street is holding a Black Friday sale, Santo.
Well, CJ, is it a coincidence that you happen to be wearing red today, or is it that you're trying to generally convey or reflect the mood in the overall market today?
That is the latter, Santo. It is the latter. I'm trying to sync myself with the mood, and it is going to be a very sad day, it seems.
So dressed in bright red on a Black Friday.
Absolutely. I mean, if you look at the cues that are emerging from global markets overnight, stocks are all set to nosedive, given the sort of crash that we have seen in the US markets and as well as the bond market overnight. And it seems that inflation has now firmly become the boogeyman of investors, and there is now emerging concerns and actually not even concerns, outright fears over what will happen to growth, not only global growth but domestic growth as well, now that our very own RBI has gone ahead and raised interest rates by 40 basis points. That said, the risk aversion is very, very obvious. If you look at the US dollar index, it's at the 20-year high, almost breaching the 104 level, which it has not done for a very, very long time. I mean, the last time it was there, we were just about to start that golden bull market of 2003 and 2007. So maybe there is some good signs there, but yeah, things are not looking very pretty.
Well, I think we've not seen this kind of an inflation in a very, very long time, and so that's clearly something that.
Yeah, I mean, just to add to that, did you see what the BOE did yesterday?
Yeah, almost doubled its inflation target to 10%, and that's quite a stiff.
I think probably that is what got the fear in the market. If a developed country like UK is doubling its inflation forecast from about 5% to 10%, I mean, you can naturally assume that could happen to the US as well, right? And if that is happening to the US, then that could easily happen to the emerging world. And probably the 75 basis point, what people were thinking, oh, at least that is out of the window, so therefore there is some mercy for us equity bulls. I think now that is gone.
This time it's for real. And also, it would be very tempting, CJ, stocks are expected to open sharply lower today. But also remember, in most cases, the valuations may seem attractive optically because they were being very, very expensive till some time back, and now they'll be off the highs, but they'll still be expensive, not that it becomes very cheap. So I think investors should carefully wait it out just before, going and rushing and buying anything just because, the stock is coming off its record highs.
Yeah, you would also have to remember, Santo, that throughout of second half of 2020 and the entirety of 2021, a lot of investors were skeptical of that bull market, right? And they were waiting on the sidelines, hoping that probably we will see a 7%, a 10%, a 12% correction, and they will jump in and buy the stocks, because now that they had missed the bus, they want to become a part of it. That sentiment, I don't think, has gone away entirely. If you look at the sort of the support that the market has taken along every decline, is a very clear evidence that there are still people on the sideline, on the fence, who are waiting and willing to buy any sort of dip or any sort of correction in valuation of stock prices, because the overall outlook for the Indian equity markets, whatever you listen to, whether you listen to your relationship manager, you listen to your wealth manager, you listen to your financial advisor, everybody seems very bullish over the 10-year trajectory.
Yes,
and I think that is why people are thinking that every decline is an opportunity if you have that long time horizon.
Well, they're missing out one thing. Typically when it's still a bull market, you see the market making a strong comeback and taking out the previous high within a matter of months. It's almost 7 months now, and the Sensex and Nifty have not gone past the highs that they have made in October. That's something that
this range bound territory is definitely frustrating. That said, the macro lowdown is taken care of, Santo, but we need to quickly dive into some of the stock action, and there is a lot today on our plate.
Yes, CJ, starting with Havells, the company reported its fourth quarter numbers. Revenue growth has been pretty strong. However, margins have been under pressure, mainly due to rising input costs, and also most analysts are of the view that this margin pressure could continue for some more time. And what is making things a little more difficult for bulls on Havells is that valuations are quite rich. So both these factors combined. Also, the management is yet to indicate any timeline for the profitability of Lloyd electrical engineering which it had acquired recently, and also that it has said that it will not immediately pass on higher costs to consumers. So, this is a stock which probably could underperform in the short term.
Yeah, I mean, there are, a lot of skeptics out there who believe that, who do not buy into this argument that the hot summer that we have seen so far all across the country would lead to sort of volume growth that a lot of people are pricing in, because let's remember, inflation is still high. A lot of consumers are facing, a pinch to their wallet at this point of time. And while incomes have increased in certain pockets of the economy, they have not increased across the board. So the jury is still out on how a lot of these white goods companies, appliance makers will perform going ahead. One stock where the jury is not out and there is a lot of confidence is RIL. RIL is going to report its Q4 earnings later today, and the stock is likely to get a little bit of support from that, even though it is very likely that it will open in the red given the sort of broad negativity that we have in the market. Its Q4 consolidated net profit is expected to jump almost 38% on a year-on-year basis, supported by almost 43% jump in sales for the company. Now, the two businesses that are going to drive this growth in the March quarter will be the refining business as well as the telecom business. The refining business is definitely getting a lot of help from the the surge in refining margins that we are seeing across the globe because of the Russia-Ukraine crisis, whereas the telecom business is going to get a benefit from the tariff hike that the industry has taken very recently and also in 2019. Apart from that, the overall trajectory for the near term, if you look at what Morgan Stanley has to say, they believe that now is the time that RIL should see a lot of re-rating in its earnings, given that the new energy business plans are now hitting the ground. There is re-rating potential happening in the retail business, which is also recovering very solidly, and the telecom and refining business, of course, have near-term tailwinds. So therefore, in the near term, the stock could continue to have support from strong earnings, even though the broader market sentiment may have downside risk there.
CEAT, the company reported its fourth quarter earnings yesterday. Good top line growth, however, margins under pressure as input costs have been steadily rising, and a very sharp dip, in fact, in quarterly net profit, 25 crore for the quarter versus 153 crore the previous year. This is again a stock which could underperform in the short term.
But Santo, there is something to make the bulls a little hopeful on CEAT, and that is that there are now murmurs in the market that the auto cycle probably is in for a reversal, in the sense that volumes are likely to pick up. If you go by what dealers are suggesting, inventories for two-wheelers as well as passenger vehicles have fallen below industry norms. At this point of time, inventory for two-wheelers are at 15 to 20 days only, whereas for passenger vehicles is about 20 to 25 days, which is very low compared to the industry average of about 30 to 35 in a normal business cycle. Now, that said, and if you couple that with the possibility of a very good monsoon and the high agricultural prices, which could boost farm income in the second half of the year, we could see a revival in volumes for the auto sector, and in turn revival in volumes for CEAT as well.
Fair point, but CEAT still remains among the most expensive stock. On a trailing basis, it's about 65 times earnings, whereas you get MRF for less than 40. So, if you're looking to play the auto upcycle, there are stocks available at far cheaper rates.
Maybe they're cheaper because they're not that great. Okay. That said, one stock which is doing very good overall in the market is Gujarat Ambuja Exports. It's a chemical play for not a chemical play but a textile semi-chemical play, where although if you go by recent stock performance, you would assume that probably this company is in for a downtime, but if you speak to a lot of the analysts and fund managers who have been tracking the company for a long time, there is a lot of optimism on the ground. Management has been aggressively trying to steer the company towards high value products, high margin products, which the expectation is that in next to 2 to 3 years, they will now start feeding into the profitability and therefore boost overall growth. The earning trajectory itself is improving for Gujarat Ambuja, and it will not be surprising that investors will probably look at the stock as look at the current correction in the stock as an opportunity to add it to their long-term portfolios.
Fairly good price run up, though I would tend to agree with you on the valuation part, not looking very expensive.
Absolutely.
Blue Star, again, good set of earnings there, strong growth in top line, and what's different about the Blue Star earnings that it's been able to maintain its operating margin despite, you know, higher input costs.
Wait a second. So Havells has not been able to maintain its operating margin, but
Blue Star has been.
Wow.
And that's something that sets Blue Star apart. Also, remember, there's been one of the hottest summers so far, and because purely on seasonal factors, you know, this is the period between April and May is where people buy a lot of ACs. I think we should see a good set of numbers for the current quarter also. How much, whether Blue Star will be able to retain its margins at current levels remains to be seen, but it does seem to be a good quarter, and the stock has been an outperformer and could continue its outperformance.
At the cost of repeating myself, the argument is same as it was for Havells. See, inflation has taken a toll on consumer sentiment as well as their spending ability. Yes, certain pockets of the society may have seen a huge bump up in earnings, especially the IT guys. I'm looking at you right now, but a lot of the other people have not seen that sort of great, earnings boost, and therefore for them to go and purchase that second or third AC right now would probably not be as easy as a lot of investors and analysts are expecting. So I would not be that gung-ho about volume growth in the first quarter for Blue Star.
Salaries are rising, CJ.
Well,
across sectors, there is a talent crunch.
Don't force me to ask you how much your salary rose, okay? That's it. Moving on. One stock, this is micro cap stock, so I am pretty sure I'm sensing a little bit of hostility already from Santo.
Yes, you got it right, CJ.
Let me start. So Sportking India is a stock that also has been, in the social media circles a lot these days, and it seems that it has got the entire investment community divided over it. The company is a cotton yarn manufacturer, which has seen a lot of improvement in its earnings on a quarterly basis. If you look at the past 2 years' performance, the earnings trajectory has been improving on an overall basis. The company has come out and said that they are going to add new capacity going ahead, which is expected to boost the revenue trajectory as well as earnings going ahead. Importantly, Sportking is largely in the athleisure segment, which is also a very growth segment at this point of time. When we were discussing the campus IPO, Santo, you will remember that same argument I had put, that campus itself is also in that sports and athletic segment where the growth opportunity is very high given the uptake in fitness activities that we are seeing across India. And so in that sense, Sportking is a play on that story. And if you talk about valuations of Sportking, on a trailing basis, it's around 4 times its earnings, whereas the industry average is about 22 times. So that shows that there is a lot of upside still remaining in terms of valuation, and that is what a lot of some of the analysts are also very bullish about, that there is potential for significant re-rating for Sportking India.
Okay.
Yeah, throw it.
Yeah. Micro cap stock, okay, it's completely what's been driving the crazy rise in prices over the last 6-8 months is the fact that there's very little of the floating stock available, and in this kind of a market, small cap is the last stock that you should be in. That apart, very simple thing, you said the earnings of, it's a low price to earning multiple, but there are a couple of red flags there. Now, if you look at the inventory days, it's actually risen to 163 days, and this is the highest since 2017. Okay. Also, its cash flow from operating activity, it's been quite erratic, right? So these two things, and while the company appears to be investing a lot in capex, I think the inventory part of it, I would be a little worried about.
There are a few chinks in the armor of Sportking India. I totally give you that. Nobody's perfect. Yes.
Oh, yes.
As far as low float is concerned, well, if a lot of investors who have been harping that argument have missed out on the wealth making opportunity that the Adani Group has given. I mean, you talk to a lot of mid cap and small cap fund managers these days, and all of them bang their head for never investing in those companies. But so I'll not be so convinced about the low float argument.
Average trading volumes less than 30-40 thousand on. So that
I think it's time we move on then.
Yes. Tata Chemicals, the other stock, again good set of fourth quarter numbers announced earlier this week, and since then the stock has been steadily inching up. The management is quite upbeat on the soda ash segment, and it says that the demand supply situation will remain favorable for the company, which means that there will be strong demand and there will be less of supply. In addition, Morgan Stanley is bullish on the stock. It has said that basically it's scaling up its specialty chemicals business and also the foray into I beg your pardon, it's IFL which is bullish on the company. It's saying that it's scaling up its specialty chemical business and also entry into the EV batteries. Both are major opportunities for the company.
Well, Morgan Stanley is definitely bullish on the EV space. I am not so sure about Tata Chemical though. That said, one stock that is likely to see a good strength in the market today despite the weakness is ABB India. It reported better than expected Q1 numbers. Generally, it follows the January-December calendar, so therefore the Q1 numbers, which is likely to aid the stock performance going ahead. If you look at the overall story for ABB, the company is a pure play on the capex theme, right? We know how the entire capex cycle revival has been a dominant theme over the past 6 to 7 months, with also a lot of support from the government coming in. Yes, some doubts have emerged because of the recent rate hike, but overall the trajectory for investment cycle looks pretty rosy at this point of time. And if you believe in that, then ABB India becomes a very sure shot bet on that theme. Even if you look at the technicals, yesterday the stock gave a breakout on technical basis. It shot above its 200-day moving average, which also suggests basically that the bullish momentum is going to sustain at least in the near term.
Well, okay, before I argue with you on that, let's take a look at the Nifty. It's down by about 262 points, down 1.6%.
Look at that market breadth, Santo. 1,800 stocks down and about 200 stocks gaining.
And if you look at the trend over the last few months, you've seen that whenever market open gap down, mostly they tend to stay around that level. So it's not really an opportunity for short sellers at this point in time.
Yeah, I mean, it's with such a huge gap down, I mean, it will be a little risky to take a short position right now in the market. You probably would want to wait for some sort of pullback to come, because a lot of people would be buying the dip and maybe then go short, given that there is a possibility that this remains a sell on rise market for the time being, given the macroeconomic environment that we are in. There is still no trigger for the bulls at this point of time. We will probably have to wait for maybe another 2 or 3 weeks to gauge how the Q4 earnings have been, and maybe if we do not see that many downgrades to earnings, then an argument can be brought forward for going long on this market.
Tech stocks are taking a beating. I think they're mirroring the fall, the pounding that.
Yeah, in the Nasdaq yesterday.
Yes,
absolutely,
exactly, 5%
absolutely.
Down. Okay. Yeah, ABB. A quick point there. First quarter numbers were good, but if you look at it, there's a significant other income component of about 334 crores. That's pretty huge. And if you take that out, then I think earnings have been pretty much in line with what market was expecting. The second part is that if you're looking to play that space, Siemens is still cheaper compared to ABB. ABB, the valuations are quite rich. That's almost like 65 times trailing price to earnings, which is clearly higher.
I would say Siemens and ABB both are great bets, given that if you're betting on growth, you can have both in your portfolios. If you can have an expensive one also, and you can have a cheaper one also, given that you would want to hedge on which company grows faster. So I would say both Siemens and ABB are a great bet.
So Marico, the last stock on my watch list, the company reported its fourth quarter earnings yesterday. Now, CJ, we had seen a sharp drop in the stock price early in April because the quarterly update that the company had given seemed to predict a very bleak picture. But compared to that, I think the earnings have been slightly better than expected, but it mirrors the same problem that most FMCG companies are facing at this point in time, but namely, the inflationary environment. However, Morgan Stanley feels that stable copra prices and also the fact that it's managed to improve its market share. These are two major positives for this stock.
I would not say that the suggestions of weakness in Marico are over. I mean, if you look at the commentary that came in from the management, they said that consumers are down trading purchases across the board. There is not even one product category where the consumer is not opting for a smaller package or a smaller sachet which is available at a reduced price, which basically tells you that inflation is taking a lot of toll on consumer sentiment at this point of time, and also raises concern on how the volume performance will be for Marico going ahead. On top of that, the commodity price inflation is not going anywhere at this point of time, given the long-drawn war in Ukraine and the sort of sanctions that are coming out on Russia. The commodity market is going to remain elevated for a very, very long time, because even if you talk about interest rates probably damping inflation, that can only happen 3 to 6 months down the road, right? So till that point of time, margin pressure will remain on FMCG.
Quick look at the market. Zomato is now below 60. It's down to by about 4%. Angel One is down by close to about
so all
5%
tech names are also taking a beating.
Even one could look at the broking stocks carefully. I think they've been riding the wave of the rush of new age investors.
But don't give up on us, Santo. So quickly,
yet.
Don't give up on us. We are in for the long run. We are here. We are loyal now. Don't give up on us.
Sona BLW, that's the stock on your radar.
Yes, but before that, I just wanted to check how Paytm is doing. Paytm is down about 2.4% in trade. It looks like the sort of sell-off that we have seen in tech names, and especially the loss-making tech names in the US because of the rising interest rate scenario, it's also echoing in the Indian market, with a lot of these loss-making tech stocks seeing a down trading in today's session.
Market at 2 month lows.
Yeah. Coming back to Sona BLW, the company's numbers, Q4 numbers, were pretty resilient given the sort of environment it is in, and I feel that resilience is likely also to percolate to the stock price performance going ahead, and it will provide some sort of a support in a weak market like this. The Q4 net profit of the company jumped close to 77% on a year-on-year basis, although the sales performance were a little underwhelming given that growth was around 4% for the quarter. But for Sona BLW, the story is long-term again, right? Here is a company which is probably the biggest beneficiary from the uptake in electric vehicles that we are seeing not only in India but also abroad. Its clients are diversified. It has clients not only in India as well as abroad, and therefore Sona BLW becomes a very long-term play. So from a valuation perspective, if you look at it, Santo, a correction in the stock price today could be an opportunity for a lot of investors who have a maybe 2 to 5 year time horizon to actually accumulate the stock on the downside, and that is why this stock was on my list given the sort of resilience it has shown in the Q4 earnings.
I agree with you, CJ. The fact is that if you want to play the
you are
EV
agreeing
space,
with me a lot today, huh,
yes,
Santo?
yes.
Maybe I have done something great today. Maybe I've got my logic pretty good.
Don't get your hopes high. See, the thing is, Sona BLW, if today someone is looking for a play on the EV space through auto ancillaries, probably there's no other replacement for Sona BLW, and which is why you're seeing that the market has been giving it a pretty high valuation as well.
Minda Corp will have something to say about that. But
strong, good strong order book also, which means that there is earnings visibility. But again, the whole thing is the overall market trend. This is again a long-term play. The valuations are high, and whenever the overall market slips into a downtrend, the first stocks to get hammered are those which are at high valuations. Investors start questioning those. So I think
also you will sell your winners first always. You tend to sell your winners first because you want to ensure that you have those profits.
It may be under pressure, but for a different reason altogether. Well, with that, we'll let you get back to your trading. Markets just opened, and it looks like we are in for a red day today.
Yeah, it does. So no need for me to change this t-shirt for a long time, it seems. That said, please post your feedback on the comment section below and follow us on the social media links that you might see at the bottom of your screen later. Also, we will catch you live again at 3 p.m. with the entire day's action, and I hope by that time I have some good news to talk about in the market, then even more losses. So see you then, and till then, take care.
Have a good day.